Scruffy!
What?
Here's your coffee.
Hey ho, silver lining. Wow, thank you very much, my love.
You're welcome.
Well, hello, boys and girls. Got me coffee in hand. It's the weekend. Must be coffee with Scruff. So what we doing today? We're going to have a little chat about the news. And Winky's going to have a little announcement. See you on the other side of the intro. And a warm welcome to one and all. And for those of you not seen me before, my name is Langers and I am the coffee obsessed scruffy trader. And it must be true because it says so right there. And I'm here with my little partner in crime, Winky. And we're going to start off with a little announcement before I go up into the study and talk about trading news and things about, well, let's just say what you think you know and what you actually do know. And it's all around news trading, etc. But our news flash is this. And what's your big announcement?
That's from Monday. I'm going to trade with you.
That's correct.
Are you serious?
She is now free and becoming a full-time trader. Just like me. Well, not quite like me. She's going to do all the end of day trading while I do the day trading. And she's also going to be looking after the Scruffy Trader merchandise, because believe it or not, over the few years that we've been doing this, it's become a brand name. And the next part of the news is it's all here. Because as you see, we're at home. We're not at the store. We've sold our other business.
No way!
And we may not be monetary millionaires anymore, but we are time millionaires. And that's what trading's done for us. We can come and go as we please. We're not tied to the store anymore. And Winky is tied to me. Oh, sorry, that's our Saturday night routine, isn't it? Whips and chips, sorry.
Oh, that's disgusting.
But yes, for all we spend all of our time together anyway, when we ran the other business it was very tiring, and we do have investments that look after us. But the Scruffy Trader is going to be our sole income. So please like and share, support the channel, all of that, because without it, we don't survive. Simple as that. So let me go up into the study and we'll discuss news trading, and I'll tell you a little bit about what Wink's going to get up to and how she's going to structure her day, and that might help you structure your day if you're looking for a little bit of freedom.
Well, we're waiting.
So there you go, boys and girls. All change in the Scruffy house, you know, and becoming a time millionaire, as I kind of call it, is a goal I set out to achieve once the factory closed many moons ago. And why? Because I don't want to be a slave to the machine. And for all Winky loved working the shop, it was very, very tiring. So if we wanted to travel, there was a lot of consequences to that. And we've developed the Scruffy Trader into such a way that it is sustainable, but not sustainable for a single wage, sustainable for 2 wages. And because I trade the prop funds as well as my own funds, I'm finding my time is restricted. So it seemed to be a sensible thing that Winky takes some of the pressure off my shoulders. Now, touching on the prop firm, before I start talking about the news, I'll give you an update of the small prop firm that I'm building up, the £10,000 one that I'm going to let you see grow throughout the year, just to show you that this is profitable. And why? Because you watch me build one this year. I started in April and I took it into 6 figures, all with statements. And there's not many people who'll do that.
Good job.
So that's where I'll start, and I'll jump on the whiteboard and a screen, because I want to have a, I don't really need to go on the whiteboard, to be honest, too much. I want to talk about news and whether or not you should trade the news or even pay attention to it. Because personally, I don't. I'm not interested in it, and I think it probably creates more problems than it solves. Friday was a good example, and I'll jump on the screen and I'll show you exactly what I mean by that. There's always a perception of what you think you know about what you actually do know. And I'll highlight that with an example. I traded the DAX this week, and I had a very strange comment, and it came in here. But that was a perception of what they think they know against what they actually do know. And let me explain it. You see, in the comment it was saying, oh, it went 400 against me, and not many traders would do that because of the amount of money involved. The first part of that was completely wrong. The most the trade went against me was 85 pips. I measured it out. And on the DAX, that is nothing. It's just a blink of an eye. And then it was talking about the monetary loss that it went to. Now, it was only at a loss, and it wasn't anywhere near the value that they said either. It was hurtful, but it was a 5-minute spike. And I'm always prepared for that. And why? Because my trade ideas don't come from the 5-minute chart. They come from higher up the charts. So my stop placement and the actual trade also come from the higher time frames. And I'll pull up the screen and I'll show you. In fact, I'll do that after I've done the prop fund. So what I'll do now is I'll go on the screen, I'll show you the prop fund, and then I'll highlight this DAX trade, and then I'll finish off talking about news. Hope that makes sense.
Isn't that logical?
Okay guys, so let me flip the screens on and we'll have a look at this 5%ers account first. And just to refresh your memory, or if you've never seen a prop fund before, the company I use is the 5%ers, and if you're interested in what I'm about to show you, there is a link for it in the description, and you will get 5% off these fees. And there's an abundance of education that comes with the 5%ers, and from myself included, because I do training for these guys. Now, on the surface, you'll be thinking, why am I paying to be in a prop fund? Well, what you're doing is you're buying into a community, but you're actually buying into far bigger funds than you would start with. And the way they do it is very simple. You either go through the boot camp, where it's a very small buy-in, it's 50 euros, and there's a series of challenges to pass, and then they'll give you £100,000 or $100,000 rather. You must excuse me, I live in the UK, so I often talk in sterling, to trade with, and then you split the process. So they give you the backing, you do the work. I went a different route, which was the instant funding way. And what this is, unlike many other prop funds that are out there, this is live from day one. There's no evaluation. If you've got a reasonable idea of what you're doing, you can go straight into market with a good sized pot, which will allow you to open up pretty much any instrument, and then there's a profit share. And what happens is, as you go through the milestones that they lay out, you'll start with wherever you start, whether it's your 24,000, your 40 or your 80 program, and you'll build that up to over 2 million in funding. that is a colossal life-changing amount of money. Hence Winky's decision, or our decision rather, to sell the business and be in partnership with the 5%ers, because the accounts that I trade for them now give us a supplementary wage, but I needed time to do it. So Winky is going to be doing all of my end of day trading. So it's like our pension account, the car account, the holiday account, because they're all end of day, and I will day trade. And she's come on leaps and bounds over the last 6 months, where she can now recognize the entries, she knows how to mark the charts, and she knows when to pull out at the right time. Yes, I am on her shoulder and I do second the decision, but a lot of the time she can do it on her own. And so that's the power of trading. And these guys can give you the opportunity, because one of the pitfalls of trading is funding. In other words, not having enough money to trade in the first place. So this is what it is. The program that I'm building up for you is this one. So you start off with 10,000 worth of funding, and once you've hit your little milestone, which is only 600, and it's not a lot, and if you do it gradually, which I will show you in just a second, you'll get the next landmark, which is the 40,000. Then you turn 40,000 by increasing it by 4. In other words, make yourself 4 grand. There's no time limit to it. You just get on it and you go up to the next level. And there are the levels. So you make 4,000, they'll give you 80. You make 8,000, they'll give you 160, and so forth and so forth. Excellent program, guys. So do check out the link below. So how am I doing? What am I doing with it? Well, here it is here. There you go. That's my name. That's the current balance. Just move that down so you can see it. That's my equity curve. And what I'm doing with it is slow and steady growth. Now, I've given myself 4 months to achieve this. And why? Because I'm dealing with pennies. In other words, I'm controlling the risk on the account. And this goes back to that DAX trade that I was talking about. You've got to bear in mind, a lot of the perception that you're seeing is based on your own accounts. Now, a lot of people only have small accounts. And when I say small, I mean under £10,000, right? And a lot of the time it's under £1,000. Why? Because the gurus of this world,
You ding-dong! Personally, I think you're a fucking idiot.
that will tell you that you can make millions of 200 quid, have filled your head with this. They've also filled your head with a lot of false information.
They've done studies, 60% of the time it works every time.
Risk reward and all of these perfect systems. It's all bullshit. It really is bullshit. You must have risk reward to a certain degree, but I look at stop and profit completely separate. They are not symbiont. They're not tied together. I know what my pain threshold is, and I know what profit I need to get out of it. Why do I look at it that way? Because I've run businesses for over 25 years. And businesses is based on profit and loss, not risk reward. There's a big difference between the two. All right. So what we're looking at here is the equity curve. My trades to date, which I've taken 104 trades on this particular account. If you want to see the bigger accounts, I did do the running commentary of those, and you see them get built up, but the structure is the same. And moving into the new year, it'll be this account and then the new ones that it creates thereafter. So where was I? 104 trades. It has a win rate of 94%. Why? Because I do my homework, and I'll touch on that with the news as well. I do lose but I know when to kill it. I have a profit factor, which is the part that you pay attention to here. So as long as it's more than 1, that means whatever you're doing is profitable and sustainable. They're the 2 parts that you need to pay attention to. This particular account has a profit factor of 8. So I am incredibly pleased with that. I have nothing running. And for those who go, I want to say a statement, I need a statement. I don't believe it unless I say a statement.
You know, you're a classic example of the inverse ratio between the size of the mouth and the size of the brain.
I prove what I do day in, day out. Don't like it, don't watch it. Simple as that. There's a statement straight in front of you. Pages, 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 pages. All there to be seen. Now, if you're part of the Scruffy Squad, they've actually been watching me trade this real time. If you bear with me, I shall show you. And I've been doing it each morning, marking up cable, telling them exactly what it is I'm going to be trading within cable and why I'm going to trade. So let's have a look. I've actually done it today. These levels here, cable levels, these are for the coming week. So I'm actually predicting what I'm doing today for next week. Alright, so it's not sort of retrospective. I've done the DAX breakdowns, as you can see, US 100, done it all for the guys. But in here in the prop funds, what we're doing is cable real time. So they can watch on a morning while I'm actually doing this. Okay, very, very simple stuff. You know, and why? I get up at 6, or I'm at the screen 6 o'clock in the morning. I've got a lot of this done by 8 AM. So you can do this round a day job, and that's what these are. Okay, so they are 8, and it was posted up at start that at 10 to 8 in the morning. What time was this one? That one was 20 to 8 in the morning, and this one was 10 to 8 in the morning. So it's all very early morning, real-time stuff. Okay, so that's where we are and what we're doing, and this is the Scruffy Squad's Meat and Bones, which is the Discord group. Depending on what level you are, depends on how far you get into it. But its real worth is this lot here. Okay, it's all videos just for the squad, and it's based on the strategies that I take, how I work with them, and more importantly, how you can use them. Very, very simple. So it's work in progress, and it's going to continue throughout next year. So that is that. So let me just quickly chat to you about the DAX. Now, as you saw with that comment, it was having a pop. Well, it wasn't having a pop. It was misinformed, shall we say. What you got to remember is I've just told you that a small account was under 10,000. I trade a large account. So if this runs, even if it goes £3,000 against me, it is not the end of the world, you know, because it's all in relation to the size of your account. If you've got a big account, you can do £20 a point, no problem, right? You've got a medium account, you can do £10, £15, no problem. You've got a small account and it's sort of 500 quid, you're 50 pence. Can you compare the two? Yes, you can, in percentage terms. But if you're looking at them in monetary terms, no, you can't, because they are poles apart. Right? So if you're risking, I don't know, say 5% on your account on a 500, the percentage of 5% is exactly the same on 100,000. But the monetary value is completely different. And I think that's where some people get a little bit lost. They're looking at some of the figures and trying to apply it to their own account. They are poles apart. All right. Now, when I traded this, I had a very good reason as to why I was doing what I was doing. Now, I've just told you that you were watching a 5-minute chart, but the actual idea came from higher up. Now, what it was actually a 3 to 4 day trade broken down into small segments. So if you're just looking at this hourly chart, you can see a colossal move. And even if you pull this out to the daily, just to start with, tremendous drop, a pullback, and now it is dropping again. All right, so that's my first clue that this thing is going to be on a substantial short, and that substantial short is down here somewhere, the tops of these, right, which is where it's actually gone. And if you watch the videos that I've done on this, that's what I said it would do. All right, I was looking for an overall move further down. Now, we all know markets don't move in a straight line. Well, they kind of have here, but but in general, they are fluttering down, and they do go in waves. All right. So when I'm day trading, I have in my mind that this is going to come down significantly. All right. Now, there's Wednesday when we came into it. It took it to Friday to get down here. Now, this whole trade I finished on Thursday, and by the time I'd finished it, it was about 3,000 quid profit. All right, and it was documented. And if you follow my Twitter or my Instagram, you would have seen it. And again, there's links for those if you wish to follow in the description. So what can you see here coming into this trade? Well, the first thing, I can see exactly where I'm placing stops, or where my pain threshold is going to be. And it's this level here. Why is that? It's a solid level, and it is the rollover point of here. So I'm prepared all the way up to there to pound average, trade in, trade out, all sorts, you know, and I'm prepared to do it because I know the overall trade is going to take maybe 2 days down to here. So there has to be movement, and there's nothing will just plummet down. It has happened, but you have to assume it's going to be normal conditions, and you're looking at waves. And if we're looking at waves, well, there's 1, 2. Now, if a market moves in cycles of 3 to 5 waves, this was a high probability it was going to continue to move down. Why? Because I'd gone through the markets and I'd done my homework. Now, on the day, I go back to Wednesday. Right. Come into the morning. We see the moves. I was quite happy. When it went against me badly, it was a single candle. Single candle. I'd already been paid, it came up. I had a fair idea it might bounce off there, but as long as it didn't go up to there, it was fine. I had my checkpoints in, so I know where I'm watching. It shot up, and it actually stalled bang on my checkpoint, right? And then down it went into the profits. So that was nothing more than a flush out. Now, I'm prepared for these because I don't believe in tight stops, and I've told you this before. I think they are the death of most traders. In fact, I call it death by 1,000 cuts. You go into your trade with your expectation of what you want, and your sole job is to save the account if it goes catastrophically wrong. And that is it. That's all its job is. And if you're trying to sort of go, well, I'm risking 1 unit to get 3 unit, you will never, ever make any money. Ever. Because you're not planning your trade. What you're doing is you're trying to force your trade. And there's a difference between the two. Now, the amount of money that you put on the table that you're about to get hit, that's where you have to pay focus to. Now, depending on the size of your account. That could be £100, it could be £10,000. Again, it's in relation to the account. And if you start going down, or the 2% rule and all of this sort of thing, again, you're setting yourself up for a fall, because the big guys know the average account size. They know roughly what 2% of that account size is, so they know where to force the market to and take you out of the equation. Stop hunting. All right? You need to be in the game but out of the noise, and that's kind of what I do. All right. So that was that, and that's how I managed that trade. And then over the course of the 2 to 3 days I was trading it, I am taking money out of the waves inside the bigger waves, and that's what trading is. Okay, so that was just a recap, and it was only because I kind of wanted to put that comment to bed and give a broad stroke explanation as to the way that I look at trading, because too many think it's just easy money. It is not in your Nelly. You have to put the work in, you know. And I see it over and over. You think if you buy your course, you're going to be a millionaire tomorrow. You're not. You think if you come in the Scruffy Squad and you're there for a week, you're going to be a millionaire. You're not. It's a job. You have to, well, if you're a professional, how long did it take you to learn your job? Is kind of what I'm driving at. And well, that's it really. So let me just pull up something else, because I said I wanted to talk about news. Now, when you're discussing news, I was going to go on the whiteboard, but I don't think I need to. I can probably illustrate it with what we're looking at here. Let me just take this out onto a clean screen. Okay, just we'll get rid of this. Now this is a 1 hour chart of cable. Now if I crunch that down and just put this into 5 minutes, right, there was a news event on Friday. It was 1:30 inflation, right? So Friday afternoon, 1:30, sort of inflation rates were released, all that sort of stuff, and there was a major spike in the market, which is here. Okay, so if I just draw on a line just so you can see it, this candle here. Now, if you were trying to sort of trade the news, did you actually know this was going to happen? No, you don't. It's just hearsay. It's an idea. Right? So what is better? Taking a punt on what you think you know, or taking a trade on what you do know? And I know you scratch your head at that statement, but let me explain it. Right, I'll just take this line to the side for now. We know as it's coming into the news event, the market is pretty quiet, right? So at that point, the news could give an explosion, and it'll be out of the ordinary. Why? Because we're dealing with small candles. All right, so whatever's going to happen is going to be exaggerated compared to what's happened prior. All right, because as you can see, these candles are, there's not a great deal of volume in them. All right, so what we do know at this point is the market is waiting for the announcement. All right, we don't know what the announcement is, and we don't know what the outcome is going to be, but we know there's going to be an explosion. All right. And the market is telling you that. Right? Echoes of the past for a vision of the future, if you like. So if that explosion's coming, there's going to be two things happen. Someone's going to be right, and somebody's going to be wrong. Okay. Now I'm banking on somebody being wrong. All right. And what happens is, and you've seen me do it with non-farm payroll, which is probably the only news event that I trade, because my rule on news is very simple. If I know it's coming, again, not what I think, what I know, I choose not to trade.
I don't know where you get your delusions, laser brain.
If I've got swing trades that are in or around where the price is, in other words, a stop can be hit or a target point can be hit, I will close those trades off before that news event. Why? Because of this. It is unpredictable. I don't know. And if I'm reading the news and I'm trying to sort of speculate on what the economics are and what the experts think, it's little more than gambling. And why is that? You watch Bloomberg any day of the week. You'll have one analyst on at 8 o'clock saying the market's going to do this. You'll have the next one on at 9 o'clock and they'll say the complete different story, the opposite. They don't know. They know as much as what you know. Okay? So we go back to what we do know. All right? So I know there's going to be an explosion. There is the explosion. So what do I do now? I wait. I wait for that explosion to end. And how do I know? I let the candle finish. Whether you're a 5-minute trader, a 15-minute trader, or an hour trader, you let that candle finish. And then what you're waiting for is the pullback. Now, the pullback will be the ones that are wrong, because there's going to be a lot of people caught off guard and they're going to be stopped out the market. You'll also have the quick scalpers coming in to get in and out and take profits, etc. So it is a reasonable assumption that you can catch a counter trend move very quickly off an overextended candle. Very, very simple. And that is something that I do know, because I know the candle's ended, and as long as it doesn't breach a certain point that I'll mark in, I know that's going to recede back on itself at least to the 30 to 50% of that candle. And as long as I'm looking to be in and out quick, I've got a good opportunity. But when you're looking at this and you think, oh, it's a good news, the market's going to go up. Well, the market did go up. But it didn't half come down first. And where did it go? Well, if you put on a line at the base of here, it went well below this candle. Down. Why? Because the market will push to force out the traders. And you're taught, and this goes back to that DAX that I was talking about, to place your stop on the underside of these candles nice and tight in case you're wrong. Well, you were wrong, you were right, but the market took you out. So it's come down, takes out the stops, and then just carries on in its journey. So again, you go back to, it's not what you think you know, it's what you do know. So in recap of this news trading, small candles before the event, it's going to be a big move. Why? Because the big boys are waiting for the announcement. The spike comes up. We know that a huge movement like this will catch people out. So you wait for it to top out, and you can catch a retracement coming back the opposite way. You know, trick there is, it's want to be in and out sort of 30-50% of that candle. Why? In case you're wrong. It comes down, get a quick profit, and then you start resetting. And the reason why I say that is it's volatile. And when it's volatile, it's unknown. And if it's unknown, it's a gamble. Then you can let the market reset. These boys here know that they're taught the sort of retail market to place tight stops, so they'll force the market down, take the stops out, and then let it carry on its journey. That is chart reading, and it's got nothing to do with the news announcement. All I need to know about news is what time it's coming, and that's it. I don't care about what the figures are. I don't care what the chatter on the forums are. I don't care what the news actually is. You know, doesn't make any difference to me. I just need to know whether it's a high impact and has a chance to move a market. And the certain ones will do that. All right. And if you go onto your economic calendars, it'll tell you which ones are the high impacts. And if it's high impact, I just stay out. And that's it. That's kind of trading for me in a nutshell. To me, it's all about trading what I know, and I know the charts. There's an age-old quote: show me the charts and I'll tell you the news. And it's very true. It is very true. So there we are. Coffee with Scruff. It's been a great weekend, and it's going to get a bit better, because we celebrating last night when that check hit our bank account and we handed the keys over. Jolly old time of things. So you will see Winky more and more on these YouTube videos, because this is going to become our job, or it is our job. And as I said earlier, it'd be fantastic if you can support the channel and all of that sort of thing, because it helps support things that are dear to our heart, and it keeps us going to sort of entertain and maybe show you a thing or two along the way. So as always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.